In the world of investing, there are various strategies and approaches that investors adopt to achieve their financial goals. One such strategy that has stood the test of time is dividend investing. Dividend investing involves selecting stocks of companies that consistently pay dividends to their shareholders. These dividend payments can provide a steady stream of income and offer a degree of stability to an investment portfolio, which can be particularly attractive in times of economic uncertainty. Roundhill Investments, a prominent player in the ETF space known for its thematic offerings, has introduced a unique ETF aimed at capitalizing on the strengths of dividend investing. The Roundhill S&P Dividend Monarchs ETF, with the ticker symbol KNGS, is designed to track an index of U.S. blue-chip companies that have demonstrated an exceptional commitment to their shareholders by consistently growing their dividends for a remarkable period of at least 50 consecutive years. This ETF provides investors with an opportunity to invest in these Recession Kings, a term coined by Dave Mazza, Roundhill's chief strategy officer. Understanding the significance of dividend investing. Dividend investing has been a long-established strategy that has resonated with both individual and institutional investors. The concept is straightforward: invest in companies that not only generate profits but also share a portion of those profits with their shareholders in the form of dividends. The significance of this approach becomes apparent when we consider the following points. 1. Income generation. One of the most apparent benefits of dividend investing is the generation of income. For income-focused investors, dividends can serve as a reliable and consistent source of cash flow. This income can be particularly valuable in retirement or when seeking to supplement one's regular income. 2. Stability and resilience. Companies that have a history of paying consistent dividends have often weathered economic storms and market downturns. By demonstrating their ability to sustain and increase dividend payments over the years, these companies exhibit financial stability and resilience. 3. Inflation hedge. Dividend payments can serve as a hedge against inflation. While the purchasing power of a fixed sum of money diminishes over time due to inflation, companies that increase their dividends tend to provide investors with a growing income stream that keeps pace with or outpaces inflation. 4. Long-term wealth building. Dividend reinvestment, where investors use the dividends they receive to purchase more shares of the stock, can be a powerful strategy for long-term wealth building. This approach leverages the compounding effect, allowing investors to benefit from both capital appreciation and an increasing number of shares over time. Introducing the Roundhill S&P Dividend Monarchs ETF, KNGS. The Roundhill S&P Dividend Monarchs ETF, KNGS, represents a unique investment vehicle designed to harness the potential of dividend investing. Let's take a closer look at the key features of this ETF and why it's gained attention in the investment world. Investing in consistency. KNGS seeks to replicate the performance of the S&P Dividend Monarchs Index, a carefully constructed index that includes 36 stocks meeting the stringent criterion of raising their dividends each year for a minimum of 50 years. This select group of companies forms the core of the ETF's holdings, emphasizing the importance of consistency and long-term commitment to shareholders. Diverse and established holdings. The ETF's holdings represent a diversified portfolio of U.S. blue-chip companies. Some of the top holdings include well-known names such as 3M, MMM, Target, AbbVie, Coca-Cola, Johnson & Johnson, and PepsiCo. These companies have demonstrated their ability to navigate through various economic and market conditions while consistently enhancing their shareholder value. Yield and income potential. With the included companies yielding an average of 3.5%, KNGS offers investors the prospect of a reasonable yield. This is particularly attractive in a low-yield environment, where investors are often in search of income-generating opportunities. Expense efficiency. KNGS is an efficient investment option, carrying an expense ratio of 0.35%. This competitive expense ratio ensures that investors can enjoy a larger share of the returns generated by the ETF's underlying holdings. Resilience in challenging times. Dave Mazza, Roundhill's chief strategy officer, aptly refers to the companies featured in the S&P Dividend Monarchs Index as the Recession Kings. The term is fitting, considering the remarkable ability of these companies to maintain and increase dividend payments throughout various challenging periods in history, including times of war, financial crises, and even the unprecedented challenges posed by the global pandemic. The allure of dividend investments in a changing landscape. As financial markets evolve, so do investment strategies. Dividend investing, while a traditional approach, has experienced a resurgence of interest in recent years. Here are some factors contributing to the renewed allure of dividend investments. Low interest rates. In a world of persistently low interest rates, traditional fixed-income investments such as bonds offered diminished returns. This has prompted investors to explore alternative income-generating strategies, with dividends becoming an attractive option. Market volatility. Market volatility and uncertainty can make investors cautious. Dividend-paying stocks, especially those of companies with a history of consistent dividend growth, are often perceived as relatively stable investments, which can provide some shelter during turbulent times. Inflation concerns. Inflation is a concern for many investors, as it erodes the real value of money. Dividend-paying stocks can offer a degree of protection against inflation, as dividend payments often rise over time, potentially outpacing the rate of inflation. Long-term wealth building. Dividend reinvestment plans, DRIPs, allow investors to automatically reinvest their dividends to acquire more shares. This approach fosters long-term wealth creation by capitalizing on the compounding effect. Psychological benefits. Receiving regular dividend payments can provide investors with a sense of achievement and a tangible reward for their investment. This psychological benefit can help investors stay the course during market downturns. Market comments and observations. As we delve into the world of dividend investing and the Roundhill S&P Dividend Monarchs ETF, KNGS, it's essential to consider the current market conditions and how they influence investment decisions. Here are some market comments and observations. 1. Low interest rates and yield hunger. In recent years, central banks in many developed economies have maintained historically low interest rates in an effort to stimulate economic growth. While this policy has its benefits, it has also led to a yield hunger among investors. As traditional fixed-income investments offer paltry yields, income-focused investors have turned to dividend-paying stocks and dividend-focused ETFs like KNGS in search of better income potential. 2. Market volatility and safe havens. The global financial markets have experienced bouts of volatility and uncertainty, influenced by factors such as geopolitical tensions, trade disputes, and economic concerns. During turbulent times, investors often seek refuge in assets perceived as safe havens. Dividend-paying stocks, particularly those from established companies with a track record of dividend growth, are considered relatively stable and attractive during market turmoil. 3. Inflation and real returns. Inflation, the rise in the general price level of goods and services, erodes the purchasing power of money over time. With the concern of inflation in the backdrop, investors are increasingly looking for ways to preserve their real returns. Dividend-paying stocks can offer a degree of protection against inflation because many companies increase their dividend payouts over time, potentially outpacing the rate of inflation. 4. Dividend aristocrats and dividend achievers. The concept of companies that consistently increase their dividends, such as those featured in KNGS, aligns with the broader categories of dividend aristocrats and dividend achievers. These are prestigious titles awarded to companies with a long history of dividend growth. For investors seeking companies with a proven commitment to returning value to shareholders, these categories provide a valuable starting point. 5. ETF popularity. Exchange-traded funds, ETFs, have become an increasingly popular investment vehicle in recent years. Their liquidity, diversification, and transparency make them attractive to a wide range of investors. As investors explore different strategies and asset classes, thematic ETFs like KNGS are becoming a preferred choice for gaining exposure to specific investment themes. Exploring Roundhill Investments' thematic approach. Roundhill Investments is known for its thematic ETF offerings that allow investors to gain exposure to specific sectors, industries, or investment themes. KNGS, which focuses on dividend investing, is one of the firm's offerings. Let's briefly explore some of Roundhill's other thematic ETFs to appreciate their innovative approach to investment. 1. Roundhill Ball Metaverse ETF METV. Launched as one of the pioneering ETFs in the metaverse space, METV seeks to provide investors with exposure to companies at the forefront of the evolving metaverse ecosystem. The metaverse represents a digital universe where individuals can interact, work, and socialize in a virtual environment. As this concept gains momentum, METV offers investors a way to participate in this emerging trend. 2. Roundhill Sports Betting and iGaming ETF, BETS. BETS is another groundbreaking ETF that caters to the growing popularity of sports betting and iGaming. This thematic ETF grants investors access to companies engaged in the online sports betting and iGaming industry, an area that has experienced rapid expansion and garnered significant attention in recent years. 3. Roundhill S&P Global Luxury ETF LUXX. Luxury goods are synonymous with quality, exclusivity, and enduring appeal. The Roundhill S&P Global Luxury ETF, LUXX, offers investors exposure to the luxury goods sector. Companies featured in this ETF are engaged in the production and distribution of high-end luxury products, which often have enduring brand value and a loyal customer base. The importance of due diligence. While thematic ETFs like KNGS and others offered by Roundhill Investments can be attractive investment options, it's essential for investors to conduct thorough due diligence. Consider the following factors when evaluating an ETF for your portfolio. 1. Investment objectives. Assess whether the ETF aligns with your investment goals and risk tolerance. Ensure that the ETF strategy and thematic focus resonate with your long-term financial plans. 2. Holdings and diversification. Examine the ETF's underlying holdings to understand its exposure to specific sectors or industries. Diversification is key to managing risk in an investment portfolio. 3. Expense ratio. The expense ratio, which covers the fund's operational costs, can impact your returns. Lower expense ratios are generally more favorable for investors. Performance and track record. Review the historical performance of the ETF and consider how it has fared during different market conditions. Market conditions. Consider how the ETF's thematic focus may be influenced by current and future market conditions. Some themes may be more cyclical or sensitive to economic events. Tax implications. Understand the potential tax implications of holding the ETF, such as capital gains taxes on sales of ETF shares. Liquidity and trading volume. Check the liquidity and trading volume of the ETF to ensure that you can buy and sell shares with ease. Conclusion. Dividend investing remains a viable strategy for those seeking income, stability, and long-term wealth building in their investment portfolios. The Roundhill S&P Dividend Monarchs ETF, KNGS, offers investors a unique opportunity to access a select group of blue-chip companies with an impressive track record of dividend growth. Roundhill Investments' innovative approach to thematic ETFs, as demonstrated by KNGS and others like METV, BETS, and LUXX, provides investors with exposure to emerging trends and industries. However, it is crucial to carefully assess these investment options in the context of your own financial goals, risk tolerance, and the broader market environment. As the investment landscape continues to evolve, investors have a wealth of options to explore. Whether you're drawn to the consistency of dividend investments or the excitement of thematic ETFs, conducting due diligence and staying informed are essential elements of successful investing. In conclusion, the Roundhill S&P Dividend Monarchs ETF, KNGS, is a testament to the enduring appeal of dividend investing and offers a compelling option for those looking to harness the power of consistent dividend payments from Recession Kings, companies that have weathered countless economic storms while rewarding their shareholders with a steady stream of income. Please note that the financial markets are dynamic, and the performance of specific ETFs may change over time. It's crucial to stay informed and consult with financial professionals to make informed investment decisions.